So my name is Jacob Goldman. My company's name is Energy Tax Savers, and I'm going to present information regarding what some people call EPAC and other people call 179D. I use those two terms interchangeably. EPAC stands for the Energy Policy Act of 2005, and it's a big document. It's about a 2,000-page document. Within that 2,000-page document is a single grouping of 6 pages called 179D, and so that is the actual law is 179D, which is part of a much bigger document called EPAC, and that's what we're going to talk about today, which is a tax incentive available through the end of this year right now, and it first came out in 2005 for projects placed in service between 1/1/06 and 12/31/13 now. The reason I point that out is it is available for all past projects all the way back to 1/1/06. So if you have clients that have completed projects since 1/1/06, those projects can still qualify all the way out to 12/31/13. You'll notice in the presentation there's little sections in red. I may or may not talk about them. Some of them I'll talk about, some I won't. But basically they represent some proposed legislation that we help write that we're hoping will get passed at the end of this year. So if that proposed legislation gets passed at the end of this year, you'll see on the top line there it will be available all the way out to 12/31/16 instead of expiring at the end of this year. But throughout the presentation, there's sections in red. It's just talking about what's proposed out there, what the potential legislation might be if it gets passed. But right now, we only have good legislation out to 12/31/13. As I mentioned, it incentivizes 3 areas: lighting, HVAC, and building envelope. It is available for brand new construction. It's also available for existing building retrofits. So, for example, Target stores, Target triple net leases most of their spaces, so they're a tenant. If Target buys a new lighting system, Target can get the benefit. If the landlord buys a new HVAC system, the landlord gets the benefit. It goes to whoever's the economic owner of the energy efficient equipment. It's also available for the designers of government buildings. So if by chance you're doing a government project, that tax deduction could actually go to you as the designer of that government project. And then the little note across the bottom is right now REITs and not-for-profits have no way of getting this benefit, and they will be able to give the benefit to another party, like a designer, for example, if the proposed legislation gets extended. But that's an if. Right now, only government buildings have this option to move the tax deduction to the designer. Otherwise, you have to be the owner or the tenant or whoever the economic owner of the energy efficient project is. So who's using EPAC? Our first utilizers of EPAC were retailers. Back in 2006, retailers were still growing, and so they'd design a prototype store on paper. Then they'd cookie cutter that prototype across the country. The design would meet the requirements of the tax incentive, and so every time they built a new one of the prototype stores, that building would qualify for tax savings. They'd also do this on the retrofit side. They'd create a common retrofit. They'd take that retrofit and cookie cutter it across their whole portfolio and qualify for tax deduction across their entire portfolio. Distribution centers are a natural extension off of retailers. DCs are large spaces. The larger the space, the larger the tax deduction for this incentive. They would also have a technological advantage. You take out the metal halides, you put in fluorescence, you put in induction, you put in LED, voila, you have a qualifying project. So we still do today tons of distribution centers. Hotels are specifically advantaged by the legislation. We'll talk about that a little later. Parking garages, it's the same story. Large square footage, large tax deduction. Take out the HID technology, put in fluorescent, induction, LED, voila, you have a qualifying project. Industrial facilities, more of the same. Metal halides out, LEDs in, voila, you qualify. Offices have some issues, and we'll talk about what some of those issues are on future slides. Where hotels get advantages, offices have some disadvantages, and we'll talk about those. It used to be that you could only go back 3 years, which is called your amendment window, your amended tax return window. A revenue procedure came out in 2011, in January 2011, that allows you to go back all the way to 2006. So that's why I said in the beginning of the presentation that we can actually go back all the way to 2006 and get you this tax incentive for those projects. So if you have projects in the past, we can still get you tax deduction for those old projects. And it's this revenue procedure that allows you to do that. So what's this thing worth? This thing is worth based on your square footage. So for example, if you have a 100,000 square foot building, your lighting deduction, you could get a $60,000 lighting deduction, another $60,000 for HVAC, another $60,000 for building envelope, for a total tax deduction of $180,000. So a 100,000 square foot building could qualify for a $180,000 tax deduction. Probably the most important thing on this slide is the note across the bottom. With government buildings, these benefits go to the primary designer. So that $180,000, let's change that 100,000 square foot building into a public elementary school. Now that designer gets that $180,000 tax deduction. The designer didn't take any money out of his pocket to buy the lighting system, for example. Yet he still gets this tax deduction merely for designing that elementary school more energy efficiently. We have some designer clients that all they do is K through 12 public schools, and they have not paid any income taxes since 2006. They've wiped out their entire income tax liability for 6, 7, 8, 9, 10, 11, 12. They're going to wipe it out for 13. Even if this law doesn't get extended, although we think it will, they'll have enough carry forward for another 2 years probably, where they're not going to pay any income taxes between the years 2006 and 2015. This is tremendously powerful legislation for government designers, for designers of government buildings.
Jacob, does that also work for private schools?
It does not.
Okay.
This is just for government buildings.
Okay.
As I mentioned, the proposed legislation, if it gets passed, will then include the not-for-profits. But right this second, not-for-profits are left off the table. So unfortunately, private universities, private schools, parochial schools, churches, no tax savings for them at all. If the proposed legislation gets passed at the end of this year, then in 2014, they would be able to pass their savings on to a designer, for example. There is that one extra column I added in. One of the great things about the new proposed legislation increases the tax deduction. So right now for that 100,000 square foot building, the max is $180,000. If the proposed legislation gets passed, the max will be $300,000. So it dramatically increases the benefit if that proposed legislation gets passed. So what do I mean by government buildings? I mean all government buildings. So on the federal side, I'm talking about offices, military bases, courthouses, post offices. On the state side, we do a lot of prisons, we do a lot of state universities. But by far our biggest government project area is on the county, city, town, village side, and that's K through 12 public schools. We have done police stations, firehouses, libraries, etc., but by far our largest group of all government buildings is K through 12 elementary school, K through 12 public schools. Those schools are throughout the country. Every jurisdiction has several of them. And so there's tremendous amount of square footage where there's tax deductions available for those designers. So we highly recommend sharing. If you are a government designer, if you're doing a government project, we recommend sharing amongst parties that may consider themselves designer. There is no rhyme or rules on who the designer for a project is. It's merely the party that the government acknowledges as the designer. And so what we do is we try to gather up all the parties that might think they're the designer, get them to come to an agreement on split, and then split that tax deduction amongst those parties and get the government to acknowledge the split. We've seen contractors, distributors, we've seen lighting manufacturers, we've seen ESCOs, architects, engineers. We've seen all those different parties share or take this tax deduction. We highly recommend sharing. We've had many situations where one party takes the entire tax deduction. Later on, another party thinks they're deserving and tries to get the tax deduction, and we have to tell them we got the deduction for somebody else. It creates a lot of bad blood in the business world, and that's not helpful for future business. In fact, we have an example where there's an engineer that all he does is design geothermal systems, and he decided to take absolutely no tax deduction. Why did he do that? He decided that the architect who gets him all these projects should get all the tax deduction. So he keeps the architect very happy, and the architect, by being happy, brings him in to all future projects. So he gets a lot of business, a lot of future business by making sure that architect is getting the tax deduction. So this can be used very strategically, and should be shared, should be split, or should be used in a manner that all parties come out happy instead of one party trying to glom the entire tax deduction. So there are 8 ways to get this tax incentive. The first way is called the whole building. Basically, you qualify for $1.80 per square foot, but you have to show that your building is 50% more energy efficient than a reference building built to a 2001 standard. So your building has to use half the energy of a building built to 2001 standards. Fairly difficult to do. Luckily, they broke it up into subparts. They took the $1.80 divided by 3, that's 60 cents. They took the 50%, and with alternative 1, they divided by 3, and that was 16 2/3%. So if you could show that the lighting, for example, created a 16 2/3 cost improvement in the overall building's energy use, then the lighting could get you 60 cents a square foot. The reason it's crossed off is because subsequent rules canceled that option, and the first reason was because the building envelope industry cried foul. They basically said their equipment can't create a 16 2/3 cost improvement. So with alternative 2, they got special compensation. They could qualify at a 10% improvement level, but that left lighting and HVAC to pick up the slack, and now they can only qualify at a 20% improvement level. So next up, the HVAC industry cried foul. They said, well, 20% is really hard, and so alternative 3 came about at the end of 2012, or in the middle of 2012, and so the HVAC was able to qualify at a 15% improvement level, which once again disadvantaged lighting, now at a 25%. So, and that 2012 ruling erased the ability for alternative 1. So there was a time period where alternative 2 and 1 were available. Now only alternative 2 and 3 are available. If the legislation gets extended, alternative 2 will likely disappear as well. Now, you would think that the lighting industry might cry foul next. Well, it turns out that the lighting industry already had an easier way to get tax incentives. So the whole building, alternative 1, alternative 2, alternative 3, all require something called energy simulation modeling. You model your building, you model the reference building, you compare the 2 models. If it shows the percent improvement, you qualify. It's quite expensive to model a building. To run an energy simulation model, you usually have to hire an engineering firm. It's one of the services that we provide at Energy Tax Savers, but it is fairly expensive. And the lighting industry was at the table when the legislation was written, so they got another way to get tax incentives that is not related to modeling at all. So lighting has the modeling option, but they also have this other way to get tax savings, which was unfortunately called the interim lighting rules. There's nothing interim about it. The lighting rules are going to be around for the whole legislation, but it's completely prescriptive. It does not require energy simulation modeling. So you can qualify strictly on a watts per square foot basis, and we're going to talk about that on future slides. So how do you qualify for this thing? You qualify by showing that your building is better than the standard, and the standard they selected was ASHRAE 90.1 2001. Luckily, they have not increase that standard to future years. What I'll tell you about the proposed legislation is they actually do increase it to 2004 for 1 year, and then the year after that they increase it to 2007. So one of the things out there is that the thing you're going to compare against is a lot easier in 2013 than it's going to be in 2014. So this is an incentive to getting your projects done this year. The target is easier to hit. Come next year, it's going to change and it's going to be harder to hit. Back on the commercial side, when a commercial building owner buys lighting, that's 39-year property. It's 39-year building property. The way they depreciate it is they take 1/39th a year for 39 years, and they take that small amount of money and they depreciate that over 39 years. What EPAct does is it moves it to an immediate tax deduction up to a limit. So the limit is $1.80 for the whole building and 60 cents for each of the subparts separately. So taking the whole power of EPAct comes from the ability to expense something in year one as opposed to slowly depreciating it 1/39th a year for 39 years. That's where the value of this tax incentive comes from. So where do we see projects? We see projects mainly in lighting. I would say 90% of our projects are lighting projects. Lighting. Lighting controls, we also see projects. On the HVAC side, it's specific technologies. We have a much better slide at the end talking about those specific technologies. We also have a lot of success with LEED buildings. So if you have a project that's going for LEED, that project doesn't guarantee that it's going to qualify, but I can tell you that it'll tend to qualify. So LEED projects tend to qualify. On the HVAC side, it's specific technologies, and then it's lighting. Most of our projects are lighting projects. So how do you qualify for this? So the table on the right-hand side has a couple building categories. For example, office. The 2001 standard is 1.3 watts per square foot. That's the light power density. That's the wattage of all the fixtures in the space divided by the square footage of the space. You get no tax incentive for meeting that standard, that 1.3 watts per square foot. To get tax savings, you have to beat it by at least 25%, and to maximize your tax savings, you got to beat it by 40%. The table across the bottom basically shows how that it's completely ratable. At a 25% improvement level, you get 30 cents a square foot. At a 40% improvement level, you get 60 cents a square foot. If you're in between, it's in between. So if you're 33% improvement, you get 46 cents a square foot. If you're 33.5, you'd get 47 cents a square foot. Whatever your actual percent improvement will define what your tax deduction is. I have a slide a little later that just says LED, and basically LED projects tend to hit these no problem.
Cool.
There are sometimes with LEDs, and I'll mention in a second, issues with the other requirements that the tax law created. So over on the left-hand side are the 3 additional requirements that the tax law created. One is to meet the IESNA minimum light levels. We almost never have a problem there. Most of these light levels are very low, and most projects are way over the illumination of those light levels. The next one, working my way up, is meet the ASHRAE requirements. We usually have no problem there. The building code in almost every state is these ASHRAE requirements, so if you're meeting the building code, you're meeting those requirements. So we usually don't have any problem there. Where we do have some issue is with meeting the bi-level switching requirement. There is a tax requirement to meet bi-level switching, and let me give you that definition on the next slide. So when you enter a room that's surrounded by floor-to-ceiling walls, you must have the ability of at least 2 light levels other than off. You have to have off, you have to have on, and you have to have at least 1 other light level in that floor-to-ceiling room, in that room. So where we have the biggest problem with this is with small perimeter offices. A small perimeter office usually has 2 fixtures in the ceiling and a switch. You turn the switch on, it turns both fixtures on. You turn the switch off, it turns both fixtures off. In which case, that does not meet the bi-level switching requirement. You have on and off, you don't have 1 other light level. even if you're going to be really energy efficient and put an aux sensor on, which we highly recommend, the aux sensor will not create bi-level switching. It will just turn off the lights when somebody's not there. So you'll still only have on and off.
Would a dimmer, would a dimmer fix that problem?
A dimmer would work, and so a dimmer would create an infinite level of light. But what I tell you is in those small perimeter offices, usually the cost of the technology exceeds the value of the deduction that you'd be adding. So let's say it's a 100 square foot room. 100 square foot could qualify for 60 cents a square foot, which is $60. It's a deduction, so you got to multiply by a tax rate. Let's say the tax rate's 40%. So that'd be worth $24. You'd have to install a technology that costs below $24 to get the benefit of $24. So, could you find a dimmer as long as you didn't need anything else? Yes, maybe you can find it under $24, but usually what we recommend is we just cut those square feet out of the tax calculation. It's not worth the added cost, especially technologies like dimmers. Most people aren't going to use them unless there's some automatic sensing, with photometric sensing, something like that. Large spaces, we have no problem. As long as there's more than one switch in the space, you qualify. There's no requirement in there for uniformity of light. So you could have 100 fixtures in a room and 99 are on one switch and one is on another switch. That would meet the bi-level switching requirement. You could obviously have a checkerboard pattern or have dimming or have inboard-outboard lighting. All those would qualify, but it's not required. You could literally have 100 fixtures in the room, 99 on one switch and one on another, and in that big room, you'd meet the bi-level switching requirement. Luckily, they did put in some exceptions. So storerooms, restrooms, lobbies, hotel, motel, guest rooms, and garages do not require bi-level switching. I mentioned earlier that hotels are specifically advantaged. Well, their lobbies and their guest rooms do not require bi-level switching. So a large portion of a hotel's square footage does not require bi-level. So this is one of the first advantages hotels have. The fact that perimeter offices have a problem is the first disadvantage for office buildings. So this next slide shows every category in ASHRAE. The first column in is ASHRAE 2001. The next column after that is a 25% improvement level. That's where tax savings start. Then after that, I put the 40% improvement level. That's where tax savings maximizes. What I've thrown in here is ASHRAE 2004. ASHRAE 2004 has nothing to do whatsoever to the tax law right now, but it happens to be the building code in 35 states. So if you're in one of those 35 states, you'll notice an X in the last column. Anywhere you see an X is a building category that if you're in one of those 35 states, you're already in the watts per square foot zone for tax savings. So here's the second way how hotels are specifically advantaged. Hotels, if you just build to the 2004 building code, you're at a 41% improvement level over 2001. So you build to 2004, you're 41% better than 2001. So not only do your lobbies and guest rooms not require bi-level, but if you just build to building code, you're already in the zone for full tax savings, the full 60 cents. So this is the second reason that hotels are specifically advantaged by the legislation. Offices, on the other hand, you still have to do a little bit better. So offices are 2004 is a 23% improvement over 2001. You still got to do better than the building code in order to start getting tax savings. So another disadvantage on the office side. This is a map of those 35 states. So if you're doing a project in one of those 35 states and you're in the building category that had an X, you should already be in the watts per square foot zone for tax savings, and you simply have bi-level switching, and voila, you get tax savings for your building. This is how the watts per square foot is going to change in the proposed law. I'm not going to get into it. The only thing I'm going to say in general is bi-level is going to go out the door, and they're going to replace it with some controls credits. So you can have no controls. You could have certain controls that give you a 17% bonus, or you could have certain controls that give you a 10% bonus. So the big changes in the proposed legislation, if they're passed, is that you now get controls bonuses and you don't need bi-level switching. Those are pretty good changes. The one disadvantage is now you compare to 2004 instead of comparing to 2001. And 2004, as you saw, is an improvement over 2001. So for some building types, it is going to get a lot harder to qualify. So another impetus to do your projects in 2013 before they change the rules. So EPAct 179D is the carrot. Rebates are a carrot, but there's a lot of sticks out there. Building codes are sticks. Probe start metal halides have been illegal since January 1, 2009. That's a stick. Magnetic T12 ballasts illegal since July 1st, 2010. Even the incandescent light bulb is being banned and will likely disappear over time. In the European Union, they're already getting rid of incandescent light bulbs. So these are all sticks. There's carrots, sticks. Sometimes the stick actually moves you, like the building code moves you beyond the carrot. So you can get a carrot just by following what the stick is telling you to do. So there's some interesting situations out there. Both of these things are moving us to be more energy efficient. What's our bread and butter? Our bread and butter project is taking out metal halides, putting in fluorescence, putting in LED, putting in induction. We see that projects all over the country. The other type of project that we see, there's still a lot of T12 lighting out there. People are putting in T8, T5, LED, induction. All those technologies are a dramatic improvement over the older technology and qualifying for large tax deduction. I'm here talking about tax, but this is not about tax. This is really about energy savings. The energy savings is repeatable, meaning every year you have the new project is another year that you're having savings over the old project. Second, and sometimes even before energy savings, is rebates, although some states don't have rebates. But usually in the states that do have rebates, it's the second largest driver. Tax usually comes in third. What we're talking about here is taking a project that might have had a 6-year payback down to 5, down to 4, down to 3. With some crazy rebates that we've seen sub 1-year paybacks for projects. So I hate the words, but it becomes a no-brainer to do these projects, although we've met a lot of clients that have no brains. So it is difficult sometimes to pitch these tremendous energy savings even when they're below 1-year paybacks. It's amazing that there's difficulty there, but sometimes there is. So this is some retrofit math. In this case, it's using a fluorescent technology. There's 250 400-watt metal halides. We estimate that project at $75,000. The energy savings for that project is about $18,000 a year. But the key here is the assumptions. So in this one, the assumptions are 12 hours a day, 6 days a week, 52 weeks a year, and 9 cents a kilowatt hour. You make it 24 hours a day, the number doubles. You make it 5 days a week, it drops by a sixth. You make it 50 weeks a year, it drops by 50 seconds. So it's really, assumptions are very important. So that's why we directly show what assumptions we're making in calculating this energy savings. I'm using a TXU rebate that pays $150 per fixture. That's a $37,500 rebate, a pretty big rebate in this case. And then the value of the tax savings is $12,493. So we have an internal rate of return of 33%, a payback of 2.48 years. I've been investing in the stock market most of my adult life. I've never had a 33% return on my investment. This is real money, real return on your investment, and it's also pretty much guaranteed. There's no risk. Unlike investing in the stock market where there's a ton of risk, there's not a lot of risk in investing in energy efficiency, and you can lock in a guaranteed 33% return on your investment. So pretty impressive investment. Why more people don't go in and invest on it, I don't know. But when you can get these type of returns, it's most companies can't invest in their own companies and get that level of return. So we highly recommend energy efficiency as an investment vehicle. Even without the rebate, it's a 15% return on investment. I might have had 1 year or 2 years where I beat 15%. In the stock market, so 15% guaranteed is a pretty good return for a slam dunk investment like this. Because of the bi-level switching requirement, we usually need to know what watts per square foot we need in each individual building space. So what we've done on our website at energytaxsavers.com is we've created these design guides. This is a sample of a design guide for offices, and it basically has what type of rooms you might find in a typical office. And then it tells you the exact watts per square foot you need to hit in order to get tax savings. So the second column shows you the watts per square foot room by room that you have to hit in order to get 60 cents a square foot. We have this for about 20 building classes on our website at energytaxsavers.com, and we find that designers knowing what these targets are, well, they qualify. Absent knowing the targets, a lot of times they miss. Probably the most important slide I have is this slide right here. What data does EPAct require? In order to get tax savings, we need data. In this case, by the way, the red does not represent proposed legislation. The red on this slide represents the data that is not typically collected by a lighting survey. So a typical lighting survey, collects information about the room, but one thing we do need it on a room-by-room basis, and we also need a description of the room. So saying room 201 does not help us. We need to know it's office 201 because that'll define what standard we have to beat. Restroom, classroom. We need to know exactly what activity is occurring in that space. The first column after that is square feet on a room-by-room basis. We need that data. So when people are doing surveys, a lot of times they bring a laser measuring tool and they beam length times width and get us the square footage for those spaces. Alternatively, because collecting added information is more difficult, some of our clients collect the information when they actually get the project. Our partners pick up that information after they've already got the T's crossed and the I's dotted, and are on site installing the lighting. Then they collect the added information, so they're not wasting time in their initial free survey. The next couple of columns are things that we normally see. So it's information about the fixture, how many fixtures, what the wattage of those fixtures are, what the total watts. All those things are typically collected. But the next column, one of the things that we need the watts per square foot of all the fixtures in the space. So if there's a fixture in the space that you're choosing not to replace, we need a count of both new and retained fixtures. We need a count of all the lighting in the space, not just the ones you're changing. This shows an example of a fixture that wasn't changed, and we just put retained, and so we need a count of that fixture in the space. We need an indication if there was bi-level in the space. Yes, no. Is there on, off, and at least one other light level in that space? If there is, write yes. If there isn't, write no. It is a requirement. We need to know it. Lastly, we need to know the foot candles post-project. So on that last day on the site, somebody walks around with a photometric tool, a light sensor, and measures out the foot candles post-project. We usually don't have problems here, but we do need a number that actually positively states that, yes, the foot candles were better than the standard. So those columns in red are important, and they represent things that typically aren't collected in a survey that we actually need information on, because we have to count, because of bi-level, we generally have to count watts per square foot on a room-by-room basis and get tax savings that way, and which case necessitating all this extra information that we need to have. So outdoor lighting is outside the scope of EPAct 179D.
Okay.
It is only for building lighting, so lighting inside the building.
Okay.
So unfortunately, right now we don't have a specific incentive for outdoor lighting. So we used to chase after every single HVAC project. What we found is that most projects didn't qualify, and we started getting a small list of projects that tended to qualify. Even they didn't definitely qualify; they just tended to. And that list has grown. And so now we're up to 17 technologies that tend to qualify for tax savings. Probably the most interesting one are the ones related to industrials on line number 10 and number 11. In industrial spaces, lighting represents the lion's share of the energy use. So if you retrofit the lighting in the category of HVAC that's on 10 and 11, voila, you have a qualifying project, because lighting represents the lion's share, and we qualify for the $1.20 and sometimes even the $1.80 per square foot just off the lighting system. The other thing I'll tell you about this list of 17 is 99% of the time, if you're not on the list, you're not going to qualify. 1% of the time, you're technology number 18. So most of the time, if you're not on this list, the project's not going to qualify for HVAC. This is a slide of some of our successes, our first 20 million of success, where just doing a lighting retrofit qualified these warehouse and industrial spaces to much larger tax deduction than just the 60 cents. It's that unique aspect that lighting represents the lion's share of the energy use, the building energy use in those type structures. This doesn't work for a school. In a school, lighting represents 15% of the energy. So if you turned off the lights altogether, you'd only have a 15% improvement. With these type buildings, lighting represents 70-80%. So you cut the energy use by half, and you're already at a 40% improvement. And LEDs can even do better than half. And voila, you're at a 50% improvement just off the lighting itself. So lighting is the driver here for these spaces, and so most of our projects in these spaces is not being limited to the 60 cents for lighting, and instead are moving up to the $1.20 and the $1.80 per square foot tax deductions, and it's all based off the uniqueness of these building types. So where are our success stories? LEED buildings, LEED government buildings. You know, if you do have a LEED project, for us to review it, it's quite easy. Just send us the EA Credit 1 template for old versions of LEED, or the EA Prerequisite 2 template for new versions of LEED. Within a half an hour, we can figure out whether that project's going to qualify for tax savings or not. LEDs, LEDs, LEDs. This is a slide I kind of gave you a preview of. Virtually every LED project qualifies for some level of EPAct tax savings. So if you're doing an LED project like you guys do, those projects tend to qualify for tax savings, with the only catch being bi-level switching, and the data. You might have a project that qualifies, but if we can't get the data showing that it qualifies, then we can't get you tax savings. But if you send us the data and there's bi-level, those LED projects should qualify across the board. So here's what our project list looks like. We've done projects in every state in the country, and it's not geographical based. So we can do projects wherever you are. We can do a project there and get you tax savings for those projects. What do we deliver at the end of the day? We deliver a tax package. The tax package has all the required elements of the tax law. In the times that we've been audited, half those audits have been answered by just handing them our tax package. The other half of the time they have some additional questions and we answer them. and we have not lost a tax deduction as of yet, knock on wood. We also review projects on a complimentary basis. So you send us the data on a project, we'll tell you how much we think the tax deduction will be, and we'll give you a fixed fee quote for us to create our tax package. We also help on your sales pitch. If you give us a prospect, we'll try to figure out how many square feet of space they have in their entire portfolio, and then we'll deliver a slide as well as a relevant article. The way we go to market is 3 ways: partnering with companies, speaking at public, conventions, and then writing articles. We probably have 150 articles on various tax topics, and the way we write our EPAC articles is by niche. So if you have a manufacturing project, we have a manufacturing article. If you have a parking garage project, we have an LED parking garage article. We also have a regular lighting article. We have 4 warehouse articles. We have an office article. We have retail articles. So whoever you're going into, we probably have an article that is quite specific to the needs of that party. So we'd be more than willing to share those articles with you. If you have a prospect, we'll create a slide for them showing them their potential, and send you a little package that you can forward on to the client. And a lot of them are on our website at energytaxsavers.com. We give the publishers 6 months, and then we post them on our website. So they're usually a little bit of a delay, but a large portion of them are up on our website. So this last slide is just, recapping the proposed legislation. 179D, the proposed legislation goes from $1.80 to $3 a square foot, but it does change ASHRAE 2001 to ASHRAE 2004. There's going to be the ability for not-for-profits to qualify, and there's going to be those allowances for controls that will benefit the lighting, even though the target's going to be a little harder. Kyle mentioned earlier 179F, which is just for retrofits. It goes up to $4 a square foot. Basically, it's a 2-part system. You figure out how much energy your building uses now. You then do your project and estimate how much energy it's going to save. You can get 60% of your deduction based off that design implementation. And then 2 years later, you measure and verify, and you can get the remaining 40%. So you're going to compare against your previous state. You're not going to compare against a standard in this case. So it's a little bit different process, but a very lucrative tax incentive. And that one also is due to expire in 2016. The very last slide is just how to contact us. Don't hesitate to reach out to us. My email address is there. Our website is up on the top. That being said, that's the end of the presentation. Thank you for joining me on the call, and thank you so much.